As late as a couple of years back, the expression financial assessment was not normally utilized in our general public. While there were who perceived the term and its motivation, the mass larger part, in spite of the fact that understanding that there is a framework out there that their credit, they didn't have a term to adhere to it. Today, in any case, because of various factors, for example, increment identity theft and broad communications promoting efforts, there are not many who don't know about the term credit score. The objective of this video is to include understanding the individual to the acknowledgement of that term. A credit score is a number somewhere in the range of 300 and 850 dependent on a factual examination of a person's credit movement. It is utilized to speak to the credit value of a person. How likely that the individual will pay their obligations. A FICO assessment depends on their credit report data, which is regularly sourced from credit departments and credit reference offices, ordinarily from the three major credit agencies. Lenders, for example, banks, account organizations, contract moneylenders, utilize a person's credit score to assess the potential danger presented by loaning cash to that person. Banks use credit scores to figure out who fits the bill for an advance, at what financing cost the advance is given, and what credit limits are resolved. The utilization of credit scoring preceding allowing credit is a confided-in framework all through the business. Credit scoring isn't restricted to banks, be that as it may. Businesses such as a cell phone company and government offices utilize similar strategies. While there are numerous others, for example, NextGen, Vantage Score and the CE Score, the most broadly known score in the United States is FICO, which is most generally utilized in the home loan industry. FICO is an abbreviation for Fair Isaac Corporation, the organization that gives the most notable and most broadly utilized credit scoring framework in the United States. The FICO score is determined by applying factual strategies, created by Fair Isaac, to data in one's credit report and is principally utilized in the banking and credit industry. FICO scores show how likely it is that a borrower will default. No open data is accessible to figure out what the scores mean as far as measurements. A different score, BNI, is utilized to demonstrate probability of Chapter 11. As expressed, banks and other lending establishments use credit scores as components in their lending decisions. Regardless of whether credit is denied or affirmed, what interest is charged, what pay level and resource confirmation is required is totally founded on a person's FICO rating. The FICO score really utilizes marginally extraordinary scoring strategies to rate a shopper's reasonableness for three unique kinds of credit: contracts, car loans, and credit cards. Each mirroring the diverse credit dangers of these different types of loans. It isn't irregular for these scores to vary by as much 50 points or more for a similar borrower. There are three significant credit detailing organizations in the United States. Albeit periodically mistakenly alluded to as credit bureaus, these organizations, Equifax, Experian and TransUnion, additionally compute their own FICO assessments. These extra scores vary contingent upon what they are intended to anticipate, what measurable strategies used to decide a score, and what data is utilized and how it is weighted. These extra credit scoring systems are various and are organization explicit. For instance, Beacon 5.0, Beacon 96, and Pinnacle scores are accessible just from Equifax. Empirica Auto 95, Precision Score, and Precision 03 are accessible just from TransUnion. Furthermore, Fair Isaac Risk Score at Experian. These different credit scores are produced for the various offices by Fair Isaac. Each varies and are occasionally refreshed to reflect current customer reimbursement conduct propensities. The NextGen score is a scoring model intended for customers, with an end goal to make credit scoring more predictable no matter how you look at it. In 2006, the enormous three credit detailing organizations presented Vantage Score. Vantage Score utilizes an alternate number each from the FICO score. It goes from 501 to 990 and furthermore allocates letter grades from A to F to explicit scopes of scores. A customer's Vantage score may vary from office to office, however the distinction would be completely because of contrasts in the data contained by the different offices, not because of contrasts in scoring frameworks. Since FICO is still generally utilized by loan specialists, the organizations keep on contribution FICO scores, or the nearest same, also. Most financial assessments utilize a different scorecard plan. Every variant may utilize singular scorecards, and an individual potential borrower is ordinarily contrasted and other past borrowers. All in all, a borrower with one 30-day late installment will be scored against a populace with some comparative misconduct. A borrower with two 30-day late installments will be scored against a populace with like credit deficiencies. The individual is then reviewed by which factors demonstrate a danger inside that gathering. Essentially, all huge banks additionally construct and utilize their own frameworks for credit scoring purposes, and are periodically related to outside scoring models. The frameworks used to produce FICO assessments are dependent upon government guidelines. The Federal Reserve Board's Regulation B, which executes the Equal Credit Opportunity Act, explicitly denies a credit scoring framework from thinking about any restricted premise, for example, race, color, religion, public source, sex, or sexual orientation. It additionally specifies that credit scoring frameworks should be observationally determined, and measurably stable. Moreover, if an unfriendly activity, a refusal of an acknowledge application, is taken because of the FICO assessment, then the particular purposes behind the forswearing should be given to the individual denied. The assertion, FICO assessment not sufficiently high, is lacking. The explanations behind forswearing should be explicit, an excessive number of wrongdoings 60 days or more prominent, and such. FICO ratings are intended to quantify the danger of default by considering different variables in an individual's monetary history. Despite the fact that the specific equations for computing financial assessments are firmly guarded secrets, the Fair Isaac Corporation has uncovered the accompanying parts and the estimated weighted commitment of each. Greater than 35% timeliness of installment previously, 30 days past due. Greater than 30% the measure of obligation, communicated as the proportion of current rotating obligation to add up to accessible available credit. Greater than 15% length of record as a consumer. Greater than 10% sorts of credit utilized. Greater than 10% late quest for credit as well as measure of credit acquired as of late. These rates offer a restricted direction in understanding a financial assessment. For instance, the 10% of the score assigned to kinds of credit utilized is vague, leaving shoppers uninformed what sort of credit blend to seek after. Length of record is additionally a cloudy idea. It comprises of numerous variables, two being the most established record open and the normal time span an account has been open. Strangely, albeit just 35% is ascribed to timeliness. If a purchaser is considerably late on various records, his score will fall unmistakably over 35%. Liquidations, dispossessions, and decisions influence scores significantly, however are excluded from the unclear pie outline given by Fair Isaac. A FICO score for the most part has a maximum of 850 and a minimum of 300. It shows a left slanted conveyance with a middle around 723. The presentation of the scores is observed and the scores are intermittently adjusted, so a loan specialist regularly shouldn't be worried about which scorecard was utilized. Since the three significant credit bureaus have their own, autonomous information bases, every one of us really has three financial assessments for some random scoring framework. As these information bases are free of one another, they may contain completely extraordinary information. Numerous banks will check a candidate's score from every agency and utilize the middle score to decide the candidate's credit value. Because of the FACT Act, Fair and Accurate Credit Transactions Act, each legitimate U.S. occupant is qualified for one free duplicate of their credit report from each credit announcing organization once at regular intervals. To make preparations for wrong data or extortion more regularly than yearly, one can demand a report from an alternate credit detailing organizations accessible on the net. This data is accessible from various sites across the net that offer a free credit report and utilization of their administrations for 30 days. After which, there is a monthly charge. The expense is ostensible contrasted with the need of ensuring your credit in the present exceptionally innovative society where fraud is getting more predominant. Make sure to check the description below for information on how to get your credit reports. If you found value so far, hit the like button and subscribe to the channel for more great content. The next videos on the screen contain information you will love. Click to watch them now and I will see you there.